Hello, this is Breaking the Mould from AJ Bell Youinvest. I'm Charles Galbraith, and today I'm with our Investment Research Director, Par Excellence, Russ Mould. Morning, Russ.
Morning, Charles.
Now tell me, Russ.
Yes.
What's the fuss?
You've been looking forward to saying that, haven't you? Well, after the Easter fast, when things were frankly pretty quiet, we've got a glut of corporate announcements coming up over the next couple of weeks, and there are three big topics that are going to create a genuine fuss, and they're betting, cigarettes, and banks.
Right, well I have to say I'm more of an investing sort of man than a betting man.
Good, that's why we're here. That's good.
That's right. I think I did have a flutter on the Grand National. But in any case, tell me, what are the bookies up to?
Well, we've got a trading statement from William Hill's today, Friday the 25th, and then next week on Tuesday we've got Ladbrokes coming out. Then on Wednesday we're coming out with a statement on the 30th. Now, first quarter results, they won't be giving too much away, but it'll be interesting to see what's happened. Horse racing results have actually gone the bookies' way. Right. Only 6 of the 27 favourites at the big Cheltenham Festival meeting in March buzzed in, and the Grand National was won by a relatively unconsidered 25-1 outsider.
Yeah,
so that's going the right way from the bookies' point of view. The punters have more than had their own back on the football, where I know there are some big clubs who've had a few tricky results recently, but most of the well-fancied odds-on shots have all won, and the punters have been running those up in accumulators, 6, 8, 10 bets that compound, and they've given the bookies a right hiding. So I think the overall numbers are going to be pretty mixed. For the full year, Hill's profits are forecast to drop 3% to about £308 million. But even there's some uncertainty. You've had some tax changes proposed by the government in terms of online betting and also fixed odds betting terminals, fruit machines. And so that is also sort of weighing on profit forecasts at the moment.
Right, and that's also therefore weighing on the share prices.
Absolutely. Ladbrokes has probably been hit worse than Hills in that Ladbrokes earns a much bigger percentage of its profits from these machines, and also its online offering hasn't been as strong. They're actually looking to improve that, change their provider, but Laddie's profits were down 36% last year. They're supposed to be down another 5 or so this year. So the numbers probably aren't going to be too gripping, but the shares, as you already said, are basically just done that to that. They've absolutely collapsed. And they do offer a decent yield if you think those dividend numbers are safe. And Ladbrokes have said they're determined to stay there. Right. So near 4% yield from Hills, 6.5% from Ladbrokes. If you get some clarity on the regulatory situation, a few value hunters might start to poke about.
Okay, so that's a really good review of the bookies. Yeah. Now let's move on to the next one, the fags.
Cigarettes, yes. Obviously the big story before Easter was Imperial Tobacco, closing its last UK factory in Nottingham. Very sad day, reflection of the pressures that do face the industry, bans on smoking in pubs and restaurants, crackdown on outdoor advertising, talk of plain packaging so the advertising is not as powerful, and also the rise of the e-cigarette. So there is some pressure there, and the companies are having to respond. So it'll be interesting to see what British American Tobacco say with their trading statement on Wednesday the 30th. Now, for all of that doom and gloom we've just discussed, BAT did make £5.8 billion pre-tax last year. This is a big, huge business, still very profitable. Lots of people get pleasure from smoking, and British American Tobacco are there to provide that. For that matter, again, because of those issues we've talked about, profits are expected to be basically flat this year. There isn't a lot of growth there. Right. So from an investment point of view, it's really a yield stock, and it's still offering around a 4.3% yield, which, better than cash in the bank, a lot of people would be quite interested in that, I would think.
Yeah. That's good. Okay, thanks for that. Now let's move on. Last and probably least in this instance, the banks.
The big banks. Yes, we've got Royal Bank of Scotland with a trading statement on the 2nd, Barclays on the 6th of May, and Barclays is actually following up with an analyst and shareholder meeting for the big institutions on the 8th, when boss Anthony Jenkins will be giving a strategy update. So there'll be quite a lot going on. Yeah. In terms of the numbers, they're likely to be quite difficult to understand as usual. 3 things to watch. Any more provisions for fines from the regulator or provisions for litigation. Yeah. Any increase in UK lending would be good news, I think, for everybody, hopefully. And also, how are their respective cost-cuttings programmes going? So those are going to be the 3 things to look for from Barclays and RBS. I guess what's interesting is that a little bit like the bookie stocks, the share prices have gone from there to there on the chart, which isn't really what you'd expect at a time when the people are getting a bit more excited about the UK economy. So maybe the old story of economy up, banks up, not quite so working so well this time.
But are you trying to tease out there that the figures don't really stack up?
I think there are some questions you can ask. I mean, if you aggregate the consensus analyst forecasts for the big 5 banks, Barclays, HSBC, Lloyds, RBS and Standard Chartered, they're forecast to make £37.2 billion pre-tax for 2014. Now, in 2007, when everything was just going berserk, 35 billion quid, 36 billion quid. So you're talking about the banks doing better this year than they did then. Now, I know they've cut a lot of costs out and they're more efficient, but are things really that good? If you think so, or you think they can get to be that good, the banks are probably pretty cheap and a good way of playing the economy. If you're not so convinced, there are probably some more straightforward ways of getting involved in a UK economic upturn, I suspect.
Brilliant. Okay, Russ, thank you very much for that. That's the end of this edition of Breaking the Mould. We look forward to seeing you again soon. Goodbye.